Hello everyone, welcome to another educational session. Today is about volume price analysis. So we're gonna see first of all what it is, some tools that could help you spot, identifying the volume, and also to understand all this concept and what that means for you as a trader and for your trading in general. So how it can help you. So as usual, before we start, I need to go through the disclaimer warning, and I want you also I want a quick feedback in regards to the audio and also whether you can see my screen and myself as well. I see that my webcam is keep loading, but it doesn't really work. Let me just try again to enable it. That's weird. So where's the question box? Guys, I would really appreciate a quick feedback in regards to the audio, also whether you can see my slides. I really appreciate that. Audio is fine. Okay. Let me just try to connect again the camera since it's used new. I can hear you, but I can't see you. Yes, I click to share you. Yes, it doesn't let me. Okay, never mind. I don't know. It doesn't work. The camera for some reason. I did something wrong apparently. So okay, as long as you can hear me, yeah, you can see my screens. The slides, that's okay. That's okay for now. So this is recorded. This session is recorded as usual. So don't worry. You cannot stick with us until the very end of the session. You will anyway receive a recording in order in order to be able to see it later on when you're free time and etc. So I need to go through the disclaimer as usual. Okay. So the material is provided as in general marketing communication for information purposes only and does not constitute an independent investment research or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instruments. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our full risk disclosure in our website, along with any legal documentation that you might need. Everything is on the website. If you cannot find it, please contact our support team. They will be more than happy to help. So indeed, Aundo, yes, PDF, yes, let me just stick them right now in the handout section. You are absolutely right. I haven't uploaded the handout. Okay, so it should be in the, give me a second. Yep, on it. So it's already in the handout section. Feel free to download it. So guys, for those that they are new here, I have uploaded the slides, today's slides, in a PDF format for you to take it, print it, or whatever you want. So that's me. I should yeah, since 2016 with HFM. 6 years. This actually 6 years this month. And I'm here to help, so I'm not going to spend time introducing myself once again. I'm here to help. Anything you need, you can find us on social media. You can send us an email at webinars@hfm.com. We are providing live analysis in social media every Wednesday, and also depending on the economic calendar, sometimes we also provide on Thursdays or Fridays. So feel free to contact us for anything that you need. So let's start. What we're going to see today, as I already mentioned, volume. What it is, why it's important, how to measure it. But first, but the most significant of all is to understand it, and in order to be able to read it. By read it, I mean what hints does it give us? What signals does it give us? What it means? Because the volume actually could be used as a strategy as well, okay, as a trading strategy. It's an indicator after all. But the question that you might want to ask yourself after we're done is whether it's an indicator for you, okay? Like every single indicator that we're presenting or a strategy that we're presenting doesn't mean that is for you. I mean, each one of us is different, so you need to ask yourself or test it or apply to see whether it's suitable for you or not, okay? And based on the volume, we're going to see how to trade the breakouts, trendy stocks, volume spikes, false breakouts, and etc. As usual, you can ask anything you want. Stick it in the question box, and as soon as I see it, I will reply. So, what it is? So, volume is quite straightforward if you think about it, but just let me just briefly explain it, because I don't know the background of all of you that are here today. So the weird thing today is that 221 people registered, but only the 10% is here. Anyway, I appreciate that you are here, because you for being here means that you're actually serious. You're here because you want to learn in order to succeed in the future, and that's good. That's a good start. So, what is volume? Volume is simply as the measurement of how much an asset has been traded in a given period of time. Okay, what I mean by that? So, basically, volume represents all the recorded trades for a particular asset. It might be euro dollar, it might be S&P, USA 500, it might be Apple stock, it might be whatever, gold, okay? So it's all the recorded trades for that asset. Let's assume it's gold, okay? For a specific period. So if, I don't know, if you're if we have the 5-minute chart on, okay? So we're gonna see from the volume, we're gonna see all the recorded trades the past 5 minutes for the gold. Is that clear so far? If it's not, interrupt me, okay? I want you to say it on spot in order to be sure that we are at the same page. So I want you to think it like this way. So let's assume. So think that. Remember that for every buyer, okay, there is a seller. I mean, there needs to be someone who is selling something in order someone to buy it, right? This is why we have the markets. This is, I mean, the basics of every single thing in life, not only the trading and the financial markets, but I mean, even if you go to the grocery because you want something to buy, you are the buyer, and there has to be someone that's selling in order to have this transaction. So for every buyer, there is a seller, right? And just as there must be a buyer in order for a seller to get rid of what he doesn't want it anymore. So like in the financial markets, for every buyer, there needs to be someone who is selling their gold, their euro, their dollar, their shares, whatever. And there must be a buyer in order the seller to get rid of its share, its gold, its dollars, and etc. So this battle between buyers and sellers for the best price in all different time frames creates a movement, right? So this battle is what it creates the market, what it creates the movement of the price. So by using volume, by identifying volume, by including volume in our analysis, either our technical analysis, fundamental analysis as well, also they play out, right? All these factors, technical and fundamental factors are also playing out. But using volume, um, you will be able to analyze your asset, okay, any financial asset, in order at the end to limit as much as you can the risk or even boost your profits. So it's a risk management tool if it's used wisely and properly. It's a risk management tool. Identifying the volume and including in your strategy, considered to be like a risk management tool. And actually, it's a very powerful tool because it cannot be adjusted, and it is difficult to be alert. It reflects the actual state of the market. Okay, it's literally the how many trades have been settled, have been placed that particular time. So it's a it cannot be adjusted. This is it. Unfortunately, it's a tool that it is very often overlooked. I mean, it's not something that you can see people um, um, using a lot or monitoring, etc. Um, so, by the way, volume can be found. This kind of information, the volume information, can be found everywhere. I mean, you can even go online in a browser and you want to, I don't know, to search volume for gold in a daily basis, in an hourly basis, etc. You can find it. You can find it everywhere. But it's helping to identify also the health of a trend based on the volume activity. Okay, this is why it's so important, because it's a technique that can be used for assessing the health of a trend. I think it's one of the oldest trading indicators, if I'm not mistaken. Used very used by market technicians, but yeah, it's not so. You cannot see a lot of people using it, even though it's very powerful. So let me just check whether I've marked. Yes, I did cover everything in this slide. So let's move on. Even though it's one of the simplest methods of observing the buying activity, the selling activity of a stock, the tricky part is the fact that volume can provide some conflicting messages for the same setup that you might have. That's why it's good to be combined, like every single thing that we present, with something, with another indicator as well, just to be sure, or to actually um, um, limit the possibilities of interpreting wrong or and etc. So what is key over here is your ability to assess the volume. That's the tricky part of volume. Your ability to assess what volume is telling you in conjunction with price action can be the most difficult part, and it can be a key factor for your ability to turn a profit in the market. So it's a very simple indicator, okay, very simple one, but the difficult part, if I can say, is your ability, each one of us, to assess it properly. Okay, to assess it by comparing the volume with the price. Okay, I have been muted. I have been muted? No, I can see that it capturing the sound. So I might be your side, Jeff, and obviously you cannot hear me. So if you want to speak, dear Jeff, but you in the GoToWebinar we don't have you are muted by default. So if you want to share something with us, just stick it in the question box. Okay. So now most trading platforms print each volume bar, like okay, on the bottom in my screenshot. Okay, is the volume. It's a volume indicator. I just right click on the chart and I enable the volume bar. Okay, so you can either do that or you can just drag and drop from the navigator. Let me just go to my MT4 just to show you. So there are some volume indicators over here in the navigator side, right? So there are 4 available, or you can simply right click and enable the volume. Okay, let me just clear everything just to be. Okay, let's clear everything. So there are many ways to have the volume in your charts, either by right click and enable the volume, or using a volume indicator that exists for free in your navigator on this right left hand side. Okay, all these for this accumulation distribution, money flow index, on balance volume and volumes, all are volume indicators. Okay, so but let's take it step by step. So as I show in my screenshot over here, at the bottom you can see the volume indicator, which sometimes can be seen as with a single, just green, or sometimes you can see with 2 colors. Just to highlight at this point that if you're seeing 2 colors, like in this example that we have green bars and red bars, green bars are printed if the asset closes up for a period, and red bars indicates if an asset closes lower for a given period. So the color coding does not necessarily means that there was more down or up volume for the period. It just represents how the asset in comparison with the volume close. So I will explain it just now. Okay, give me time. Okay. Sometimes you can see it just with green, by the way. It's the same thing. It still shows volume. We're gonna go through each volume indicator separately in a few slides. Okay, but let's take it step by step. So when we analyze the volume, there are some guidelines. Okay, so there are guidelines that we can use in order to determine the strength or weakness of a move, of a trend, of an asset, etc. So traders, and I'm sure that you might agree with me, they are more inclined to join strong moves, right? And they don't really take part or take no part in moves that shows weakness. Or we may even watch for there might be even watch for an entry in the opposite direction of a weak move. These guidelines do not hold true in all situations. They are a good general aid in trading decision. Okay, so there are, as I'm saying over here, there are There are some common setups for analyzing volume in order to identify the strength of the volume, right? So first of all, you need to check based on the volume. You have a sense of the market interest. Then, if you have seen an exaggerated move, by checking the move along with the volume, then it gives you a different meaning for your current trend and your other current asset. It might give you also bullish signs. It might give you signs of a reversal. If you check the reversal point or the potential reversal point of your trend along with volume, a different conclusion comes out, and also breakout along with volume. So you can use the volume comparing it with, as I said, price action, any exaggerated move, any reversal of the trend, any bullish signs that you might see in the price, any breakouts. Okay, so theory says that when volume increases sharply without significant changes in the asset price, the price will eventually jump upwards and vice versa. But yeah, so what we mean now, the 5 points that I just stated earlier, we're gonna see them one by one, so don't worry about it. Let's first see what we mean by volume and market interest. So let's assume that we are in a strong uptrend, a clear uptrend for a while. So it has a rising price action, right? You can see that a rising. Oops, no, 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 no. Let's go back. Laser. So a rising price, an uptrend. So let's assume that, let's take the first example that we are clearly in a rising market. And we are seeing, I will zoom in so you can see that. First of all, we are seeing consecutive bullish candle, some reversals indeed, but the asset is continuing to post some higher highs and higher lows. So we are in an uptrend, okay? Even if I don't check the whole picture, even let's assume that I was over here. I noticed this uptrend in October, let's assume. If you're using the volume, you want to check also the volume other than the price action. You can see both green and red bars, but that is not the significant part of it. You need to check whether you have a rising volume as well. And if you notice by connecting, you see that by having a trend line on the peaks of the volume, I can see that I have a rise in volume as well. Yes, there are some swings lower indeed, but the same stands for this price action. Every overbought asset needs a bit of a reversal before continuation, etc. So you can see that there is a rising market, but there is at the same time a rising volume as well. So what that means? That means that buyers in the buying side of the market, there is a lot of enthusiasm and increasing enthusiasm that they keep pushing prices higher. So increasing price and increasing volume confirms the continuation of an uptrend. Now, if we were seeing an increasing price but a decreasing volume, that shows lack of interest, lack of enthusiasm. Like that's the very, very first sign that we might see bulls turning on the other direction, or don't be so enthusiastic, don't really, the lack of interest. So this is a warning of a potential reversal. This can be hard to wrap your mind around, but the simple fact is that a price drop on little volume is not a strong signal, but a price drop on a large volume is a strong signal that something is about to change fundamentally. Okay, so look at that. So it was the very beginning of this trend. volume where I had the small bars, right? So there wasn't like a significant volume. It was a little volume, but then slowly rising and rising along with the price. Perfect. There was a bit of a decline in volume over here, but not something to trigger our attention because you need to combine it along with your price, right? So as long as the asset was held above the 20-day moving average, for example, or it keep or yes, above the 20-day moving average, for example, or within the upper Bollinger, there was an indication of a reversal. Indeed, we have seen a bit of a slight. If we just emphasize over here, there was a bit of a slight decline in the volume, but it settled and quickly start rising again, or at least settle steady. Can you see that? You see that? So it's not, I'm not saying that as soon as you see a small bar in the volume or a declining volume means that, oh, this is a confirmation that the trend will reverse. No, you need more than that. This is just a sign that you need to investigate. So how you will investigate it? For example, you're gonna check, is my asset remains in the upper Bollinger Band area? Yes, it does. So I have nothing to be afraid of yet. Is it above my 20-day moving average? Yes, it is. So that decline in volume, it didn't really, it was as a sign which we start monitoring again the asset, but it didn't confirm as a reversal. But if you have a rising, as I said, I zoom out a bit. If you have a rising if you have a rising, okay, we don't have this option. This is a falling price and rising volume. No, okay. If we are, if however we have a rising, um, if we have a significant drop, let's say on this uptrend, significant drop, um, but the volume that very moment that this is happening, let's take this for example. That was a significant drop, right? Because it was the first time that we had a lower high. Okay, it was a significant drop. If you have a significant drop, which we go down to see the volume, okay, you can see that the volume that very moment was quite strong. It was not quite strong, it was very strong because we were in the zenith. It was at its peak area, right? If you consider all this performance. So if you have a significant drop on a large volume, that's the very first strong signal that something is fundamentally changing. So this is an alert that, you know what, you are existing uptrend, all this long uptrend it might change. It might be near to its end. It's not a call for action, but it's a very strong sign that something is fundamentally changing. So it's something that you should add to your monitor list, that I have spot that. So I should monitor whether this trend is running out of steam. Okay, so if we see a big price drop on a large volume, then it's a strong signal that something fundamentally changing. You can see that falling volume followed, but yes, that drop happened when the volume was at its peak. Okay, so the in this example, the end of the trend wasn't imminent. It took a while, but indeed, because this is my next example, indeed eventually started reversing. It was, let me check. Oh no, sorry, that's two different examples. So I think I have the continuation of this chart in the next few slides, so we're gonna see it in it soon. So and the same stands for a vice versa scenario. If you had a downtrend, okay, downtrend, so we have a falling price and a rising volume, that means that we have a strong downtrend, so that the there are a lot of sellers, there are a lot of interest from sellers. So if you have a falling price and a rising volume, that means that there is a strong downtrend. So in this scenario, if suddenly, or not suddenly, it depends on which time frame you are, if you see a sharp, a big price rise, increase at the moment of a large volume, that is a strong signal that something is changing, and you might be careful because it might run out of steam, and the existing downtrend might change. Okay, and if this is a 4-hour chart, by the way, so dropping, volume was increasing, so that was a sign that there is a lot of increasing selling interest, right? So this means the continuation of a trend. However, sorry. Okay, you can use either your moving averages or connecting by the trend lines in order to have a trend, or using channel. So once we see a big price rise on a large volume, such as this one, which if we check, it was at this peak as well. So that was the very first sign that something might change. So there was a big, the very first alert ahead of time. But then it posted another lower low, so it continued to the downside until it recovered again at its peak, right? We're having a second sign that something is changing. It might run out of steam. And indeed, you see, it kept this floor untouched and started posting higher lows and higher highs. So hopefully we are okay so far. I will keep going. So here is another example on what we have just discussed, just to understand what we mean by rising market in a decreasing volume, or rising market in a rising volume, etc. So actually we cover rising price in a rising volume, or falling price in a rising volume. Now let's see the scenario of having a price, a trend reversal signal. How you will know that you have a trend reversal signal is when you have you have a rising market and decreasing volume, okay, or a falling market and decreasing volume as well, because the decreasing volume means that the people that they were responsible for that they were part of this trend, either to the upside or to the downside, they lack of interest. They are not interested anymore in this asset. So regardless if you are in a rising market or in a falling market, decreasing volume implies to lack of interest, and that could possibly in the near future be seen as a trend reversal. Okay? Now, yeah, so so just one more thing in regards to the bullish signs before we see further about reversals. Volume can be very useful, as I said, in identifying bullish signs. So imagine that volume is increases, like in this example over here. Okay. Actually, let's. So, and you see that over here we have volume that continues rising. Actually, we had a spike as well over here. So, rising volume, if we connect the peaks, right? Rising volume. But we had a falling, or a turn, a pullback in the price, right? So, we have volume increases, but price decline over here. And you see that? And then we had a correction, but then that correction followed with another move lower, which was lower than the previous low. Okay, so we have a volume increase, right? It's rising, but we have the price declining, trying to recover the gains and then decline again. If the price on the move back stays higher than the previous lows, which is not the case over here, but if this second move lower, the bottom of it was higher than the previous, okay, that means that sorry, so actually let's take step by step. If the price of the move back stays higher than the previous and volume is diminished on the second decline, then this is usually interpreted as a bullish sign. In this case, we have seen the second low be slightly lower than the previous, right? It's slightly lower than the previous one. So but we didn't had a diminished decline, a diminished volume. Instead, on the second pullback, our volume came up higher again. So the only way, this is the second example, so I can show you to you. Yes, sorry. Instead of just talking, it will be okay. Here it is. So can you see this one over here? So sharp pullback, correction, second pullback, but the second one was higher than the previous one. Okay, and the second one, as I mentioned. Oh, sorry. Come on. Why doesn't it take me back? You with me, guys? No one is talking for a while, so started to worry a bit. So as I said, if we have, if the second pullback post a low higher than the previous one, right? And at the same time, the volume shows to be diminishing at the time of the second. So you see it started slowing down a bit. Then this could be interpreted as a bullish sign. Okay, so that's a sign that having another pullback, but with the bottom be higher than the previous, okay, along with a declining or steady but not rising, declining volume, that is a bullish sign. That's a sign that there must be the asset might have settled steady and it might be appreciated in the near future. Are you okay so far? Okay, so let's get back up. Sorry, continue. I think I skipped a slide. Okay, so okay, in this example, it wasn't the scenario that I just described. We had a fall, but the second fall was lower, but afterwards it was appreciated and it gave a third fall, which it was much higher than the previous, right? And as I said, in a declining volume, and you see, since the second fall, it started slowing down. Then on the third floor, it continued turning down. So that was our bullish signal. It was a bit delayed, but it was there. It came afterwards. That was false alarm, and the confirmation came here. Okay, are we okay so far? So let's move on. Exhaustion moves and volumes. So you need to be careful with that. You know, sometimes we have a really big moves, exhaustion moves, exaggerated moves as we call them. So in a let's take the first example, the left hand side, which we have seen the asset being in an uptrend for many days, and it was we were in a rising market, and started to revert to to pull. You can see it reverting lower, okay, until we had this extreme fall. You see that it was really sharp. So imagine this is daily chart. In 1, 2, 3, 4, 5, 6 days, it returned 1, 2, 3 months gains just in 3 days. So it was an exhaustion move. So these generally sharp moves, okay, just so these sharp moves in the price, if they are combined with sharp increase in volume, okay, like in the example here, can you see that? Sharp exhaustion move, boom, and a big spike in price, a big sharp increase in volume as well. So if we have this combination, either if this is an extreme move to the upside, even if this is an extreme move to the downside, it doesn't matter. What matters is, what does it mean? It means a potential end of the trend, obviously, right? So in general, sharp moves in price, if they combine with a sharp increase in volume, that shows the potential end of the trend. Because why is that? This can be explained. It can be explained because it means that participants who waited and waited and waited and were afraid of missing more of the move, right? Of the move pie in at the market tops, exhausting the numbers of buyers. At the market bottom, falling prices eventually force out large numbers of traders, resulting on volatility and increase in volume. So we will see a decrease in volume after the spike in these situations, but how volume continues to play out over the next days, weeks, and months can be analyzed using the other volume guidelines. So, so the increase in the volume means that it depends where depends no wait increase if we have a continuous increase in volume in an existing trending market, then that means a continuation. But if we have conflicting um, uh, messages, then this is what it means, what we mean by reversal. Because over here, we have been in an uptrend for ages, and where there's a sharp move downwards, which caught a lot of interest. So at the bottom, you see, when they are Nayabe, I know it's a bit confusing, but when did we spot, which day, if we just emphasize over here, when did we spot this spike of volume? We spotted it here. But here, the asset was already at its bottom, right? So the spike came after the sharp decline. The spike in volume came after the spike, after the decline. So what that means, now we are in the bottom, right? Because this spike in volume was in the bottom. So that means reversal. But in which direction? Can you ask me? Can you tell me? So on the 6th of February here, we were already in the bottom. It was already had its sharp move down, but we we have seen a spike, like in the next session it was a bit lower, in the next it was higher and higher, right? But the price remained at this bottom. It didn't post a new bottom. So can you tell me, since we are saying that theory says that in a sharp move, if we have a spike in volume, it means reversal. So in this case, in which direction? Up or down? Bullish or bearish? Long or short? If you were here, right? Here, let me just be exact. If you were here and you notice this spike, what decision you will have made? To go long or short? It's not only in Yabe. My question is in general to everyone, guys. Anyone? Anyone? Long, long, exactly. So it might look that, oh, we were in an uptrend and we spot reversal, so it might continue falling. No, it's not that. It's when you spotted it and where your price is at that very moment. So indeed, long. See, you could benefit on this spike. Okay, there was a small reversal, but again, up. Because you see, your volume started easing a bit, steady, right? So you need to be careful where, when you spotted this spike, where your price was at that very moment, where we was seated. And also, as I said, always combined with something else. For example, over here, it had two tests of the same bottom. It didn't break it. So that was a sign that that sell-off, it ran out of steam. It's already done. There's no more ground. And the fact that we had so long tails, but the candles closed higher, was another indication, another confirmation that it was indeed a reversal. Okay, so what else? The same stands for the next move. I mean, okay, falling, right? But rising, but over here at the bottom of it started to slow down again, and then it started to slow further, right? So that was question marks. Is running out of steam? Why we have low volumes at this bottom? So what's going on? So at least even if sometimes it's not that clear and you're not sure, at least it alerts you to start monitoring it. William, I cannot reply. William says that I find volume in Forex unreliable though, or am I the only one failing to interpret it? As I said, it's not that easy. It's not that easy. I don't know which indicator you are using, whether you are just enabling the volume option or you are using a particular volume indicator from the navigator. But yes, it needs to be very careful. Yes, sometimes. First of all, it needs to be combined, okay? That's for sure. It needs to be combined for something else. So you can use it just for confirmation if you want to. If you're finding difficulties to interpret it properly, then you might need to combine it just for that extra confirmation. But it's not, yeah, it's not something easy. It needs a very, very precise careful way to interpret what science is giving you. We have discussed about it, and I will show anyway other volume indicators that they might be more straightforward and you might not be failing to interpret them. It might be more straightforward. But yeah, it's not easy to use it like solo with price action. It will be good to add your trend lines. Okay, if you don't want further indicators, that's fair enough. But you need to have also your trend lines to see the price has broken my trend line, the volume broken my trend line, like here and here. Is it slowing down? The volume, is it the price, is it also slowing down? I mean, you need something extra for sure. Which time frame? To everything, because it will adjust it based on the time frame that you're using it. The tricky part is to combine it with your setup existing and to read it. So if you use the volume indicator in a 5-minute chart, it will give you the trade, the recorded trades for the last 5 minutes. I mean, it will be adjusted in the time frame that you are, dear William. But it cannot stand alone for sure. Cannot stand alone. Yes, there are based on your broker, but not all of them. Okay, like allow me sometimes to see also the other volume indicators. I will run a bit so we can see the actual. Okay, you know what? I'm gonna just, because we ran out of time, instead of keep saying, because we analyzed before that the bullish signs, so you can watch them later on very carefully. Okay, because we have already. Shall I skip and go close it straight to the indicators? So just to help William as well, and Lang and Naebe. Or are you okay with this the theory that we have just covered, that bullish? You need to be careful, that you need to be aware that bullish signs is when you have a rising market. Um, um, Sorry, wait. So if you have spot lower, the second pullback being higher than the first one, that's a bullish sign. If you have a rising volume and a rising market, that means a continuation of the trend. If you have a rising market but a falling volume, that's a lack of interest, and it might shows a reversal. If you have a spike in volume, that means that there is a strong signal, either if that's a reversal one or it's a continuation one. So we cover all this, but I just interpret them over here in examples. So we mentioned all this before, so we'll just run a bit, because I want to go straight to the indicators in order to help also the guys here that they said that they're struggling to read and interpret the volume, or that the volume, as William is saying, there is no central exchange to provide all volume. What I see in my MT4 relates only to my broker. Yes, what you're seeing in the volume, the enable, the volume, this one, yes, these are indicators. Wait a minute. So let's take a step back. If I enable this volume option, yes, this is what we see over here is based on the broker, but it's wrong for you to say that there is no central exchange to provide all volumes. There is. So there is, and I will show you right now. There are many, many, many websites that they provide the volume of the global, not only HFMs and etc. Okay, so it might be CME Group, it might be Yahoo, it might be Statista.com. There are a lot of you. If you Google, there are a lot. Bar chart. I like using bar chart for spotting the volume as well, for spotting the day's volume per asset. So there are a lot that you can Google. but because you mentioned that you made it a bit generic about all the volume indicators, so that's not really 100% correct. So we have plenty of volume indicators. Yes, that enabling the right hand side, it focus only on the HFM's clients, but the others, such as money flow indicator, on balance volume, accumulation distribution, they are they have a mathematical formula behind it, and they are giving the general market approach. What I mean, okay, these are the 4 free available indicators, volume indicators in MT4 or MT5 right now. Okay, so what they show, all of them, is they show the volume, okay, but how can I tell? They are shown the volume based on mathematical formulas, so it's like a visual. They show visually the volume, but in a slight different way, because they take into consideration some other parts of the market as well, and I will explain right now. So let's take it step by step. So have in mind that we have these 4 different volume indicators. The first called accumulation distribution line, the second is money flow indicators, third is on balance volume, and the third is volume measurement. All of them, they are volume indicators. Volume indicators, as I said, are based on mathematical formulas that are visually representing using these charting platforms. Each one of them, though, has a different formula. So you need to find the one that works best for your particular market approach. That's compulsory. I mean, this is not required. It's not a requirement for you to use these particular indicators, okay? But they will help you, as I said, to trade your decision in the end. However, let's take it step by step. Move on. Let's start with OBV, the on-balance volume. What is that? Is using the volume flows in general, not the brokers, okay, the volume flow to predict changes in the market, in the asset. It's a very, very, very old indicator. It takes us back to 1960. Has been created back in 1960. So it's a combination of momentum and volume, sentiment and momentum. So it's based on the belief that the volume increases sharply without a significant change. Okay, so if you see, is what we discussed earlier. When the volume increases sharply without any significant change in the price, then means that we might see the price jumping in the upwards or downwards in the near future. It's like there is some kind of it's an ahead of time signal. So in this case, the OBV, the on-balance volume, is a very effective indicator, not solely for the broker, as I said, my dear William, because it takes into consideration also the momentum and the sentiment. So starting from an arbitrary number, volume is added when the market finishes higher, or volume is subtracted when the market finishes lower. So this, the fact that the volume is added when the market finishes lower, or when it finishes higher, is subtracted when it finishes lower, and added when it finishes higher. So based on this action, this means that the price action, actually this provides a running total and shows which assets are being accumulated. Okay, so the on balance volume is based on this distinction. It's based on the distinction between this. Again, smart money is not the ideal word to say, but um, that is on this belief that the not belief is a fact on the fact that volume may increase even as the price remains relatively lower, and it means that it will eventually in the near future will be move sharply either to the upside either to the downside. So because there are people waiting, they might have some pending orders, and etc. So it can be applied. It is based on the theory of financial market of investing in stocks and etc. And it can be applied in forex charts as well. Okay, I know that is a bit tricky. That's why I'm going to show examples. So I want you to understand. So over here, it's a very, very, very old example, very, very old example. But what matters is so I have the OBV, I have the volume as well, and I have the price action. Okay, so remember that especially in the stock market, we have hedge and pension funds that they invest in the markets. They invest in shares, in stocks. So as the hedge and pension funds begin to buy into an asset, while the retail investors they are my selling, right? Volume will increase even as the price remains relatively at the same level. Eventually, though, the volume will be driven upwards, exactly because the hedge and pension funds they invest millions and billions, right? So the fact that they are buying, but the retail investors are selling, that means that because it has to do with market cap, people are investing billions, the retail investors invest much less, so the fact that they are selling is not so significant. However, because they are both investing, either the one part is buying, the other one is selling, the volume is still there, which comprises both buying and selling trades, but it's there. The volume represents also the buying and the selling trades. It's just the recorded trades. It doesn't shows direction, right? So since we have a lot of buying and a tiny selling, that means that the volume may increase, even though the price will stay steady. So eventually volume will do this jump higher, because if we have the big institutional players, pension funds, etc., investing billions, then yes, they will manage to push the price higher. So that was an ahead of time signal. Okay, so if we have volume increasing, then eventually, even if we cannot see it in our charts, we're gonna see the um, uh, we're gonna see the oh god, I'm referring to OBV, okay, the OBV indicator. If we see the OBV indicator rising, that means that positive volume, we had a positive volume pressure that could eventually lead into higher prices. Okay, so the slow appreciation of the OBV line hints that the price will see a jump sooner than later. While a falling OBV, it means negative volume pressure, and it will lead to lower prices. This is a bit different with the actual volume indicator because the OBV takes into consideration the um, um, uh, the OBV actually has been created in a way that it will theorize that volume precedes price. So it gives you a hint ahead of time, exactly because it is that the mathematical formula that it was created. Um, but the way that Mr. Granville created the OBV is like it took it into consideration the other than the sentiment, the momentum, the volume. It also take into consideration the current trend, the current price action. That's why. So, conclusion for OBV. You can try it, my dear William, if you want to. OBV is not the volume as such. It takes into consideration, as I said, momentum, sentiment, price action, etc., current and past, and etc. So if you have OBV and you see your OBV falling, like here, if it starts falling, so that top along with this fall, the very first fall, is a very first indication that we're gonna have further decline of the asset, and indeed continue. So it was an ahead of time indication. As soon as your OBV starts appreciating, so you see it started appreciating, it crossed above my previous trend line, and it kept rising. So if I connect the lows, I had seen rising and rising. So that was an indication that an uptrend has started and it will continue. So you can use OBV for entry and exit as well by using trend lines on your OBV. So you see, I connected my lows, and over here I've seen that it's falling below my trend line. So that could have been an exit level signal. Here as well, that could have been an exit level signal on my existing short position. That would be an exit signal for my existing long position. If I miss both, then that is an indication that we might have a falling market. So it might be the very first indication that this uptrend is running out of steam and a downtrend will start. But confirmation never came, as you can see. Instead, it settled. My price settled as well. So what we are waiting right now, we are waiting either for a breakout, a return of the asset upwards, breaking the previous high, and we're waiting for either higher highs or lower lows in order to spot whether we have an uptrend developing or a downtrend developing. Okay? Or you could have put a vertical line on your latest OBV, how you call it, pick, right? And on the price action as well. And as soon as you see them appreciating, so that here, in combination with the break of my OBV trend line, that was an indication that I could enter long, at least for a while. Why not benefiting this part? Yes, William, I know. Indeed, it's, not all volume indicators are good. And indeed, you are right. The volume, the simple one, the one that we right click, is broker. So it's very difficult to be interpreted. It might have some false breakouts and etc., but they are not all the same. Okay, that's why I'm presenting OBV, accumulation distribution, etc. So let's quickly, what I have over here, OBV. Okay, divergence. The theory of divergence is still there, is always there. So if your price action connecting the lows, okay, you have a rising trend line by connecting the lows, so you're an uptrend. But you soonish or in the next few days or etc., depends on which time frame you are, you have seen that your OBV is falling while your price action is rising, then that means divergence. Divergence is not call for action. It's just a signal that we might see the trend reversal. So if you have a rising market but OBV is either dropping or flat, that's the very first hint that we need to be careful, because we might soonish our existing uptrend might run out of steam. An entry position in this case, it will be the break of your trend line here. You see that? So we got this indication between in the mid of May, sorry, mid of June. So we got the indication that we have a divergence, bearish divergence, but the call for action, so the entry point confirmed in the around the mid of June. Yes, here, when finally the asset broken our trend line and it continued lower. So that could have been an entry point for a long-term downtrend. Indeed, it settled a bit for a while, but it resumed soonish. So if you have spotted that, you could have benefited this distance from here to here with a wise stop loss, obviously. Stop loss, that's why I will highlight a bit the stop loss. In this case, if you're going to use your trend line as your entry point, then you need to consider the previous highs as your stop loss. So the previous high was here. Okay, if you want it tighter, you can use that one, but you need to be a bit more careful because it's closer, so it might retest it before coming down. So yeah, the bullish divergence will be if you have a falling, let me clear all this mess, erase all, perfect. So if you have a falling market like this one, and your OBV started either to be flat, if you connected the lows, it was flat or it was rising, that would be bullish divergence. That means that we might see in the near future the beginning of an uptrend. So long entry will be on the breakout of your trend line, of this falling trend line, right? With a stop loss at the latest low, on the low fractal. Okay, so let's move on. It's already 20 past, so I will need to soonish end this session. This is another indicator, volume indicator, the money flow index. Again, a really old one. So this is a slight different one because it is combined by volume weighted. It's called, actually is known as volume weighted RSI. So this indicator measures the inflow and outflow of money into that asset, that particular time period. So in simple terms, it is an oscillator that uses both the price and the volume to measure the buying and selling pressure. So think it like a volume weighted version of RSI. Okay, so it measures we said the money flows, but it's also the enthusiasm of the market. So it is ranged, so from 0 to 100. So you can use it like in a similar way as RSI, because if you see your MFI moves above 80, that means that it's in an overbought territory, or if it moves below 20, it's in an oversold territory. So it's the same mentality as RSI. So any overbought or oversold levels, remember, that can be used to identify unsustainable price extremes. So MFI is the same. above 80 is considered overbought, below 20 is considered oversold. So that implies to a reversal. If the asset is oversold, we'll need a recovery, we'll need a correction, we'll need to correct, or even it might suggest the reversal of the trend, or just a correction, right? So that's okay. This is the mathematical formula behind it, the fact that it's using the TPL price and the volume, but that's not what really I want to show right now. Let me just, you don't need to remember the mathematical formula, it's just to learn how to interpret it. And here is an example for that. So as you can see, where the asset over here, the dollar cut in a 4-hour chart, it topped over here, having its latest up fractal, started slowing down a bit, slowing down. Second high fractal was lower than the previous one, and we keep having bearish candles, falling, presenting the fall of the price. And at the same time, we could see that MFI was also declining, was decreasing and decreasing and decreasing. So a falling price along with a falling MFI implies to rising selling pressure. Once MFI stop declines, or it starts at least if it's settled, that's the very first sign that the falling market might run out of steam. But as soon as we see it start rising again, that will be a sign that it could some buyers, that the market has attracted some buyers, and that is some increasing buying pressure. So if the price rises again, starts rising again along with the MFI, that it means that there is an increasing buying pressure. Yeah, that's why I said it's really identical with RSI. I mean, the way to interpret it. Again, you can use trend line on your MFI, connecting the lows or the peaks to spot any breakout of the trend line, and etc. So if I just to show you something just quickly before we end the session. So I have this rising MFI at the same time that my asset is rising. So you can slowly connect the lows, and as soon as you see a breakout, that will be the very first alert that, oh, a fall might follow, the fall in the price. So let's see, examine the price. It had some doji candles at that point, okay? So the breakout and the sharp fall came here. But we had an alert in advance. We had an alert 1, 2, 3, 4 sessions ahead. So that breakout on the MFI came four sessions before the actual drift. So that was ahead of time alert. I think I'm gonna call it a day, guys. I have the examples that you can check yourself. Any extreme oversold level in the MFI, it could be a sign that it will recover, the asset will have to bounce, will have to correct, or it could start find some buying pressure, right? While every overbought condition, it might be a sign for a pullback because it's overbought in its correction, or this, or it's run out of steam and a new trend is developing. So okay, yes, I think I'm gonna call it a day. It's already 24 past. I have another example of MFI and divergence. This is very careful. You can see that while the price was rising, okay, either by connecting the highs or the lows, it was rising, but we started seeing MFI falling, right? So falling. So we had a breakout of our trend over here, and we had also further decline of the MFI as well. So that was a nice entry level for a short position. Again, falling market, but rising MFI. So entrance for a long position, either using the trend lines in your MFI or using trend lines on your actual price action. But yes, the divergence signals are very, very helpful if they have spotted. They could help you. Yeah, I'm gonna call it a date. Anything you want is on the website, but don't hesitate to contact me. I have also the accumulation distribution indicator against the same mentality. It's not range, but rising, a rising volume and a rising market implies to more buying pressure. So continuation of the uptrend, falling price along with high volume implies to further selling pressure. But if you see in this case, okay, if you see lower, actually it's not in this case, so in this case we have lower lows, but then it's steady. So that implies that the selling pressure is still on. If you were getting consecutive lows, that would be an indication that it might start fading. So like here, rising, but AD, accumulation distribution, started declining. So that was an indication that this is running out of steam. So accumulation distribution lines, if we see the accumulation distribution line moving lower, but the price moving higher, so this shows distribution or underlying selling pressure that can foreshadow a bearish reversal of the price chart. Again, trend lines help you a lot. You see, breakout. That's the call for action. Because we have two eyes, the same signal from our MFI and the price action. The MFI came first. It was the one that firstly signaled the potential reversal, but finally the price indeed confirmed a breakout and a decline, indicating that that could be a short entry. So guys, I'm gonna call it a date. Sorry, it took quite some time and I had to skip some slides, but you have the PDF, so you can read it when you have like some free time. And if you have any questions, don't hesitate to contact me. So yeah, we are here to help. webinars@hfm.com. I will try to reply in the same day for anything that you might need, okay? So if there are no questions, I'm gonna call it a date, okay? No? 5, 4, 3, 2, 1, 0. Okay. Thank you guys. Have a great day ahead. Take care. Bye-bye.